Q&A at the very end, but we want to get through the presentation and save everyone some time today. So we thank you all for joining us. And on my screen, you will see a PowerPoint presentation. We are going to follow this presentation. And again, please be sure to write down all of your questions and save them until the very end of the presentation. What is the Homegrown Purchase Assistance Program? This slide introduces the Homegrown Purchase Assistance Program and its overall purpose. The program was created to expand homeownership opportunities within the city of Chicago by helping qualified buyers overcome some of the biggest upfront financial barriers to purchasing a home. Specifically, the program provides financial assistance that can be used toward down payment requirements and eligible closing costs. Please be sure to mute yourself so we can avoid an echo, please. Thank you. For many buyers, especially first-time home buyers, saving enough money for these upfront expenses can delay or prevent homeownership. This program is designed to help bridge that gap. Beyond helping individuals purchase a home, the program supports broader community goals by expanding access to affordable housing opportunities. Homeownership also helps working families build equity over time, creating a pathway toward long-term financial stability and wealth generation. Now that we've covered the purpose and goals of the Homegrown program, let's take a closer look at the funding source and the selected program administrators. The program is funded with $21 million in housing and economic development bond proceeds provided by the City of Chicago. This funding allows the city to invest directly in expanding homeownership opportunities and reducing barriers to purchasing a home. Following a competitive request for proposals or RFP process, the city selected 2 organizations to administer the program. These organizations are Neighborhood Lending Services, commonly known and referred to as NLS or NHS, and TRP Lending, which is an affiliate of the Resurrection Project. These administrators serve as the operational partners responsible for managing applications and guiding participants through the application process. The administrators review and process homegrown applications submitted by prospective buyers. They verify that applicants meet both program eligibility requirements and household income limits. They also coordinate funding reservations to ensure assistance funds are available when the buyer is ready to move forward. At closing, they facilitate the disbursement of assistance funds and help ensure all program requirements have been satisfied. Their role is critical in maintaining program compliance. One important feature of the Homegrown program is that participants are not required to use a specific or preferred lender. Eligible buyers may work with any lender that is properly licensed and in good standing with the state of Illinois. This flexibility allows homebuyers to shop for a mortgage product and lending partner that best meets their needs while still assessing homegrown assistance. Now that we've covered how the program is funded and administered, let's review the specific eligibility requirements that determine who can participate in the Homegrown program. First, applicants must meet the program's household income requirements. The program uses total gross household income to determine eligibility, and income must fall within the established limits. The property must be located within the city of Chicago, and the home must be occupied as the buyer's primary residence. Applicants must qualify for and obtain a first mortgage through a lender that is licensed and in good standing with the state of Illinois. In addition, buyers must demonstrate that they have sufficient financing to complete the purchase transaction. Homegrown assistance supplements a mortgage loan with grant assistance. It does not replace the need for mortgage approval. Participants are required to complete a HUD-approved homebuyer education course. This requirement helps ensure buyers understand the responsibilities of home ownership, budgeting, mortgage obligations, and the overall purchasing process. The education component is designed to support long-term affordable home ownership. Finally, applicants must comply with all program requirements and provide the documentation needed to verify eligibility. Now that we've reviewed the basic eligibility requirements, let's look at the program's income limits and how eligibility is determined based on income and property location. There are 2 zones, 2 levels of support for the entire city of Chicago. Zone A targets neighborhoods experiencing a substantial increase in sales prices. And Zone B focuses on low income census tracts where at least 70% of families earn at or below 80% of statewide median income. Zone A provides up to $70,000 in assistance for households at or below 120% of the area median income. And Zone B provides up to $50,000 in assistance for households at or below 150% of the area median income. It's important to note that both Zone A and Zone B areas exist throughout the city of Chicago. There is a map included for reference. Everyone will receive a copy of this PowerPoint presentation, but we do ask again that you go to our site, which is going to be on the next slide, to determine if the property address is located in Zone A or Zone B, but this is just a map for reference. HomeGrown does not divide Chicago into community areas. Zones are determined by census tract data. How to determine whether a property is in Zone A or Zone B. First, direct your applicants or partners to the HomeGrown webpage at chicago.gov/homegrown. Once there, they can enter the property's address into the zone lookup tool. The tool immediately tells them where the property falls in Zone A or Zone B. Why does this step matter? The zone determines the maximum grant amount a buyer can receive. It also sets the income limits that apply to the household. And importantly, knowing the zone upfront helps lenders and buyers structure the financing correctly from the start. The key takeaway is that accurate zone identification ensures buyers are matched with the correct assistance level and prevents issues later in the loan process. The next slide will provide information on how buyers can begin the process. First, the buyer must complete a HUD-approved homebuyer education course. Next, the buyer will require a mortgage pre-approval from any lender they choose. With pre-approval in hand, the buyer can begin shopping for a home. The buyer then needs to secure and execute a purchase contract before moving forward with the HomeGrown application. Once a contract is signed, the buyer must contact one of the authorized service agencies that administer the HomeGrown program. The application is started through the agency. The agency will handle the eligibility review, collect all documentation, and process the HomeGrown application all the way through closing. It's important to emphasize applications are not submitted directly to the city. Everything goes through the partner agencies. The key message to convey here is that the process is designed to be structured and supported with agencies guiding buyers from contract through closing to ensure all requirements are met. Now we will go through what type of properties are eligible. What type of homes qualify for HomeGrown assistance? The program supports standard residential properties from single-family homes, condominiums, townhomes, duplexes, or two flats. What type of properties are ineligible? 3 or 4 unit buildings, certain new construction homes that are tied to city programs, such as the City Lots for Working Families program or homes built through a City of Chicago land sale redevelopment agreement. Homes purchased through city land sale programs are not eligible because of affordability or resale restrictions that may conflict with HomeGrown rules, and to develop or construct a newly built home is also excluded. Now that we've covered which properties are eligible, the next step is understanding the program's 5-year recapture term, which is an important requirement for all buyers. The HomeGrown grant is fully forgivable after 5 years as long as the buyer meets the program requirements. During those 5 years, the buyers must keep the home as their primary residence, not rent or lease the property, transfer ownership, or take out a cash-out refinance or home equity line of credit. Repayment is required if any of the following occur before the 5-year period ends. The buyer must repay the remaining balance of the grant if they sell the home, transfer ownership, move out of the property, lease or rent the property, or obtain a cash-out refinance or home equity line of credit. How the forgiveness schedule works: the grant is forgiven monthly over a 60-month period. Exactly 1/60th of the grant is forgiven each month the buyer remains in compliance. Any portion not yet forgiven at the time of recapture must be repaid. For example, if a buyer remains in a home for 30 months, then 50% of the grant is forgiven. The remaining 50% will be due if the buyer triggers a repayment event before the full 5 years. This structure allows the city to protect the investment while still giving homeowners a clear path to full forgiveness. Program assistance is provided through 2 authorized agencies. HomeGrown applicants must work with one of the 2 designated program administrators, not both. It's important that they do not work with both. These agencies are the only organizations allowed to accept applications, review eligibility, or process homegrown grants. The 2 authorized agencies are Neighborhood Lending Services and TRP Lending. Their information is here on the screen. It is also on our website, chicago.gov/homegrown. Again, everyone will receive a copy of this presentation for their information, but it's also noted on the website. No other organizations, lenders, real estate agents, nonprofits, or consultants are permitted to submit applications for this program. Applicants must choose, again, only one agency to guide them from start to finish to avoid delays or duplicate submissions. We are now at the final slide of the presentation. Again, my name is Destiny Durham. I'm the project manager of homebuyer programs here within the City of Chicago's Department of Housing. Again, on the screen is our website. If you have any questions, follow-up questions, need clarification, please feel free to reach out to myself. But again, you can also refer to Neighborhood Lending Services and TRP Lending as well. At this time, we will take any questions that you may have. And we do have something from a hand raised. Claude Connor, can you please unmute yourself and provide your question?
Sure thing. I'm Claude Connor from Fifth Third Bank. My question is on this particular product, the application process. So it sounds like the application process from the grant is solely on the borrower, and the lender cannot submit the application on the borrower's behalf to the two agencies.
That is correct.
Correct?
That is
Okay.
correct.
Okay.
That is correct. Thank you.
Mm-hmm.
Alicia Martin, she asked, can the grant be there with BANA funds? No, it cannot, as stated in the presentation. Let me go back to that slide. If there is anything tied to City Lots for Working Families or City of Chicago Land Sale Redevelopment Agreement, you cannot there the funds. No, this program cannot be stacked with IDA. The reason it cannot be stacked with IDA is because IDA is bond funded and the funds are through bond. Therefore, this program cannot be stacked with IDA. It cannot be stacked with TaxSmart, and it cannot be stacked with any other bond affiliation entities that the buyer could receive. We also have another question that I missed, whether this is or is not only applicable for first-time home buyer. Great question, Carrie. No, first-time home buyer is not a requirement. However, the buyer cannot currently own a property. So even if they did sell the property that they already had, that is certainly okay. They cannot be a current homeowner. So it's not necessarily designated for first-time home buyers, but if you currently own, you cannot partake in the program. In regards to DTI requirements, is that determined by the lender or calculations made by NLS and TRP. The DTI requirement is going to be calculated by you from the lender. Again, they're going to get that mortgage pre-approval, go through their process. And for everyone here on the line, the debt to income ratio for back end cannot exceed 38%. The reason for the 38% is we want buyers to be able to afford the home. This is merely grant assistance. This is not to give away properties or give away homes. You have to qualify for a mortgage before you partake in the homegrown program. Will the city accept a third lien position? Yes, we will. If that second mortgage is tied to something within, the product, then yes, we'll go to third lien position, but we will not go to fourth lien position. That is very important to note. We will not go to fourth lien position. So we will do third. We want to do second, but we'll do third. We will not go to fourth. How should the grant be listed on the CD? You can list the grant as homegrown. Very basic, homegrown grants. Is there a FICO requirement? That depends on the lender. The program in the City of Chicago does not require credit scores. That is up to the lender regarding credit scores. How complicated is the application process for the buyers to navigate? The application process should be very straightforward. It's going to be merely the same documents that they provide to you as a lender, such as tax returns, W-2 statements, anything of that nature. The only thing that is not required is the bank statements. We do not collect bank statements. All the documents that you will get from the buyer is going to be the documents that they will have to submit to the lender for the eligibility to be determined. And again, that executed purchase contract is going to be a big requirement because again, we must know the property. The property address is very important because you must know if the property is going to be in zone A or zone B. Megan, can we get a copy of the slide deck? Yes, I stated everyone here will get a copy of this slide deck presentation. We also want you to also visit chicago.gov/homegrown. On the website, there is a frequently asked questions, which will help with a lot of questions here that we have on this call today. So there's going to be, I think, 15 pages of a frequently asked questions on the website. Can fund be used to pay down debt to qualify? No. Or put down a larger down payment to qualify? No. We want buyers to be able to afford a mortgage loan on their own. This grant is not to pay down their debt to help them qualify. Can the first mortgage be an FHA or conventional loan? Absolutely. Again, as long as the debt to income ratio does not exceed past 38% for the back end. Where do we find the rates for this program? This program does not have any rates. Again, we are not a lender. We do not look at rates, nor do we collect any credit scoring. So that is up to you, to the lender, to determine if your buyer is qualified to purchase a home and if they're eligible for mortgage financing. Can we leverage this program with the Fannie home style renovation financing? I am not certain, Elsa, of what that program is, so I don't want to speak to that and say yes or no. If you could send me more information regarding that, I'll be further able to answer that question. Can CHA vouchers be used? Yes, they can be used. As long as your buyer qualifies for a mortgage with a back-end debt to income ratio that does not exceed 38%. Can this program be used to repay debt, car loans, credit cards? No, it cannot. As stated, this grant is not for the sole reason to pay down debt. It is to help you sustain and purchase a home. So we will not be paying off debt or credit cards with this. How will interest rates work? Interest rates are determined by the mortgage lender. We are not a mortgage lender. We do not determine interest rates. There is not a interest rate for this grant. This is a forgivable grant for 5 years. It's not based on an interest rate. Is non-occupying co-borrower allowed? No. All buyers that are borrowers and co-borrowers are required to reside in the property as their primary place of residence for at least the 5-year recapture term. You are required to hold this property as your primary place of residence. If you look on the screen, that is the eligibility requirement. This is not created for investors. We want you to reside and maintain and live in the home. So that is very important. If they are purchasing a 2-unit, they must reside in at least one of the 2 units. Is there a specific pricing for the grant? Or are you using our investor pricing? There is not a specific pricing, Natasha Robinson. Buyers are able to, it's they are able to purchase the home that they're able to afford. That's why the mortgage pre-approval is going to be very important. We do not have a pricing cap. There's an income qualification. What is the expected timeline from application to closing? Can a loan close in 15 days or less? More than likely, it will not be able to close in 15 days or less because a scofflaw is going to be required. For those on the line that are not certain what a scofflaw is, that is us checking City of Chicago debt, such as parking tickets, administrative hearing debt, water debt, things of that nature. When requesting that is going to be requested typically when the buyer is conditionally approved, and that can take almost 2 weeks to receive back. Therefore, more than likely, you will not be able to close in 15 days or less. That will be merely impossible to do because there are going to be qualifications that they're going to have to partake in. And then again, that's going to be scofflaw as the number one factor. They are given 90 days to close. Of course, you can close typically within that 30 to 45 day timeline, but 90 days is the maximum. When a buyer submits a complete application with that executed purchase contract, there's a 5 to 10 business day window to approve the buyer. Can this be combined with NQM loans? I'm not certain what an NQM loan is. Can you please put in the chat the full terminology for the NQM loan? Back in 38%, even if we have an AUS approval that is higher. No, the back end ratio is 38%. That is a hard percentage, and we will not go any higher than that. The approximate turnaround time, Monica, I just answered for a full application is 5 to 10 business days for NLS or TRP to review and respond to the buyer if they need any further information and what is required in time for closing. What is turnaround time for approval, and will there be a different turnaround time to receive funds? No, the funds will be at the title company. The funds will be granted once the buyer has been approved to close and that closing date has been agreed upon. So you will not have to worry about the funding. The buyer will not have to worry about the funding. This will be a straight grant, a straight transaction going to the title company. The funds will already be secured and waiting for the transaction to be complete. Will the DPA administrators be issuing regular updates on the remaining funds available for the program? And if so, how frequently? More than likely, they will not provide updates on the remaining funds. We'll just ask you to check in periodically regarding that information. But of course, if buyers submit an application and the funds are running low and or there are no more funds, they will be notified and receive that information. Will you allow framework or eHome for education? Unfortunately, no. Online home buyer education is not permitted for this program. The reason being is we want our buyers to be engaged, ready for home ownership versus taking the course online. We want them to have further engagement with the HUD counselor. So unfortunately, eHome America and Framework is not permitted for HUD homebuyer education. They can take the HUD homebuyer education at any of the HUD delegate agencies. They're not restricted to take it solely at NHS or solely at TRP. It can be at any HUD delegate agency that they choose to work with. Is it FHA, conventional, and VA? Yes. As stated earlier, yes. Again, as long as that back end debt to income ratio meets the requirement. How many days does it take to receive funds for closing? Again, Natasha, that is going to be taken care of at time of closing. So again, please review the FAQ that Jenny has put into the chat. It will answer a lot of these questions that we're getting on here. There is not to be any cash back provided to the buyer under any circumstances. Any overage must be applied to the principal of the loan. Will you accept I-10 borrowers? Yes. Is there any minimum investment required from the buyer? The buyer must put in at least 1% of the purchase price of their own funds. Again, buyers must put in at least 1% of the purchase price of their own funds. Again, we ask that you please review the information online because there are AI created flyers circulating in the world, and they are not all correct. A lot of them I have seen says that a minimum of $3,000 is required. That is not correct. It is 1% of the purchase price. Please be careful what you may read and or see that has been created from any other outside entities that are not DOH, NLS, or TRP. Any chance we can provide a matrix? Unfortunately, we are not providing a matrix for this program. We ask again that you refer to the website for all information. So they can put down 20% down and use the funds to cover the 20% down. However, they need to be able to qualify for the minimum down within a 38% DTI first. Yes, that is correct, Alex. They must, again, however, they're not putting down 20%. They're putting down 1% of the purchase price. So please note that. We never said 20% down. So they must put down at least 1% of the purchase price and meet that 38% debt to income ratio. Will rental income of a 2-unit subject property count towards the total income for calculating the grant? Yes, more than likely that will occur. Can this grant be utilized for purchase rehab loans? Yes, it can. The rehab cannot exceed $50,000. It's important to note rehab cannot exceed $50,000, but a purchase rehab loan, yes, you can do a purchase rehab loan. Can this be used to pay points to buy the first mortgage interest rate down? Unfortunately, no. Due to this being bond funded, It cannot pay down interest rates. Can you discuss the grant cannot exceed 25% of the purchase price? Does this pertain only to the HomeGrown program? Yes, that only pertains to the HomeGrown program. If you were to layer the other grants, that will be acceptable. But again, we have the percentage cap at that because we did not want, for example, a home to be $70,000 of a sales price and you get the grant for $70,000 and you don't have any mortgage or anything. This is, again, grant assistance. This is not to give away homes or make one qualify for a home. That's why that is a cap for the purchase price. But again, the housing market has increased dramatically. So we have not seen that come across. Again, if there is going to exceed, we are expecting it to be maybe a home that is not move-in ready or habitable with a low price like that. So again, we do have that disclaimer in there, but we're hopeful that we will get that, that buyers will be able to obtain this HomeGrown grant and not run into that situation. If the buyer decides to refinance, would the city's grant lien allow for resubordination? Yes. Again, we will allow for refinance in the event that you want to lower your interest rate or your term. But if you are requesting a cash out refinance or a home equity line of credit, that will not be approved. Is there any purchase price limits? No. So the potential buyer can have up to 3 mortgage liens against the property? Yes. Can we utilize a non-QM loan and can we close in a trust? No. Can this grant be used to purchase properties in community land trust with the ground lease? No, because of the affordability restrictions, Jason. So how much down payment can we increase to? If they qualify for $70,000, should we increase down payment so the cash to close is 0? The cash to close is going to be 0. Again, we are asking for the down payment to be 1% of the purchase price. That's the main requirement. So however you work that number in with the 1% purchase price and what they qualify for, the cash to close is to always be 0. We do not provide an income calculation worksheet. This information is going to be calculated again with Neighborhood Lending Services and TRP, the standard lending way. Is the housing counseling virtual or in person? It depends on the HUD delegate agency. Many HUD delegate agencies offer the courses via Zoom and or in person. It is up to the HUD delegate agency where the buyer takes the course. Can they own an investment property? No. As stated earlier, buyers cannot currently own a property to partake in this program. This is not an investment program. Your buyer cannot currently own if they are going to partake in the HomeGrown program. If the condo association and HUD are lenders for condo that is being purchased, would the buyer be eligible for the HomeGrown program? Yes. Can we use the funds for discount points? No. Non-qualified mortgage, not conventional or FHA. That's the meaning, Dwight. More than likely, no, that will not be eligible. Can I-10 buyers use this grant or do they need to have a social security numbers? We want to want them to have a social security numbers even if they are an I-10 buyer. So we will not determine them eligible, but we will encourage them to work on getting their social security number for sure. If you are approving I-10 buyers, if they can get the mortgage loan, more than likely they'll be able to assess this HomeGrown purchase assistance program. Are buyers with DACA available for this program? I'm not certain what DACA is. At the closing, can the borrower receive cash back? No. No cash back to borrowers. That has been stated repeatedly. No cash back to buyers. Any overage must be applied to the principal of the loan. With 21,070,000 possible, that will be 340 applications. Is there plans to expand the offering once funds run out? We would love to, Beta, but I cannot speak to that at this time. It depends on funding. We cannot also say that it will be exactly 340 applications because, again, it's going to be based on household income limits, and therefore not everyone is going to receive $70,000. So depending on the funds, we will have to discuss later if additional funds will become available. Can funds be used to buy down the rate? No. You mentioned since these are city bonded money, it would not be able to be combined with many federal programs. Not many federal programs, but bond funded programs. Can you give some example of federal housing programs that would not be able to combine with homegrown? Again, not federal programs. This is going to be any IDA down payment assistance that's bond funded, so it cannot be layered with homegrown. And also Tax Smart, yes, that is a federal program, and that's bond funded. It cannot be there with homegrown. Are gift funds considered own funds? Yes. Can the buyer be doing loan with bank statements or other NQM loans for qualification and still get the assistance? More than likely, no. They will need to prove that they have a mortgage pre-approval and that they can get a mortgage. Did you say mass down payment will be 25% of the purchase price? No, I did not. I stated the 1% of the buyer's own funds is required. 1% of the purchase price. 1% of the purchase price. Allow for CHT properties? Yes. Does the lien position matter when there are multiple grants? We want it to be in second position, but if you're going to have a second mortgage, then we will fall in third lien position. We do not want to be in fourth lien position. Do you have a list of HUD agencies that we can provide? Again, all of this information is on the City of Chicago website, chicago.gov/homegrown. I'm going to put it back up on the screen. And you will find a list there, a list of the HUD delegate agencies. You will also find a FAQ sheet. You will also find the HUD income limits. Can buyers complete the counseling and income review prior to putting a property under contract? Absolutely. We encourage buyers to take the HUD home buyer class first so that they can understand home ownership and then shop for a home. And from there, they'll get the mortgage pre-approval in order to know which home they would like to purchase. Are 2-unit properties with ADU eligible? Yes. I am still confused. For example, if a client qualifies for full $70,000 and minimum down payment is 1%, not 3%. 1% of the purchase price. Then they have way more than needed to bring zero down. So can we then increase how much down payment they are putting to use the rest of the 70 they are getting? Again, Alice, it's 1% of the purchase price. And then you're going to plug in the not the BANA, but the homegrown purchase assistance price they're going to receive. You're going to plug in the grant amounts. Can they use funds to buy down mortgage insurance? No, these funds are not used to buy down mortgage insurance, points, or interest rates. If I have a pre-approval, who can they reach out to apply? Again, Neighborhood Lending Services or TRP are the only two program administrators that they are to reach out to apply. The City of Chicago is not accepting applications. Do you have to be an approved lender? No, you do not. Again, as stated, buyers can work with any lender of their choice. I'm going to take some hands that are raised. Amra, you had your hand raised.
Thank you, ma'am. You did answer one of my questions regarding you mentioned.
I can't hear you.
Sorry, can you hear me?
It's a little better.
Sorry about that. You mentioned we can do purchase renovation, so I'm assuming that's FHA 203K limited as long as they don't exceed 50,000. And can we use that for conventional renovation as long as it does not exceed 50,000?
Yes, that is absolutely correct.
Now, for the borrowers, realistically, so I have a customer pre-approved. How soon they will have to start this process for them to do what they need to do from their end? And do we reserve those funds, or it's first come, first serve?
First come, first serve. You can have your buyer get started today. Applications opened up today. And again, please contact the two agencies, one of the two, not both. One of the two listed on the screen, and they will help begin the application.
I'm assuming they have to be pre-approved prior to sending them that way, right?
That is correct. Pre-approved and with the executed purchase contract.
Thank you, ma'am. Thank you.
You're welcome. Another question in the chat, campaign for appraisals and home inspections count towards the 1%? Unfortunately, no. The grant, let's say 70,000 can be used for putting more money down beyond the 1% on funds, down payment, and used to cover closing costs. No, again, this is going to be separate. Please, 1% of the down payment is separate from the grant. We are not combining any funds or paying for anything else solely and merely just if this is a grant. You're going to treat this like any other forgivable grant that you do when you do your purchase transactions. Is there a maximum down payment? No, there is not a maximum. The minimum is 1% of the purchase price. If they want to put down more, they're certainly allowed to. Does the borrower have to be a U.S. citizen or green card? And what about non-permanent residents? Great question. We do require state of Illinois identification card or driver's license. Again, if you are working with the I-10 borrower, we ask that you work with them to obtain this information. But if they are receiving financing through you, then more than likely they will be able to become eligible for a HomeGrown. However, we do want them to get a state of Illinois license ID or driver's license card. If the buyer has unpaid debt with the city of Chicago, is that an automatic denial? No. They will have a chance to pay that debt. Yes, they will. They must show that they satisfied the debt, that they paid it in full, or entered into a payment plan. So when they get the information back from CRP or NLS that they do owe the city, they will have time to provide that information, but they will not receive a clear to close until they satisfy the debt with the city of Chicago. I'm assuming pre-approval and pre-qualification are both acceptable. We certainly want the mortgage pre-approval, Tina, versus a mortgage pre-qualification. But again, if they're going to have that executed purchase contract and maybe a pre-qualification, that may be okay, but we are looking for a mortgage pre-approval. How many properties does the borrower can own? Again, the borrower cannot own any property when they purchase this. You cannot own when you are purchasing and receiving the HomeGrown Purchase Assistance Program. This is not for existing owners. No, it is not for first-time borrowers. If you have a borrower that possibly sold their home a year ago, 2 years ago, or 3 years ago, and they want to purchase again, they could certainly partake in the HomeGrown program. This is not geared towards first-time home buyers, but is also not geared as an investment program for people that currently own. Let's see. Our sample approval letters. Please contact NLS and TRP for sample approval letters and promissory notes. Household size. Is that based on anyone in the house? Yes. Over 18? Yes. 18 years and older, household income is considered. Alex, so if a client is putting 20% down on a $300,000 home, which is $60,000, this grant will cover all of that. This grant will cover what they qualify for, Alex. Whatever household income threshold they fall in the line of, this grant will cover for that. We cannot project or, give out numbers. I'm not going to do that on this line because, again, it's based on the household income and what that person or borrower may qualify for their household size. I can just give you the facts, which is 1% of their own funds to put down. And according to the gross household income, they will receive the HomeGrown grants if they qualify. Again, based on that 38% debt to income ratio for the back end. Household size, is that based on anyone? I answered that one. What is the borrower has a home now, but was sold before the purchase, a new one, but the existing home is on the application still they will not be cleared to close until they can close on that home. They have to sell their existing home before they can close with a HomeGrown Purchase Assistance Grant. If a borrower is paying points of their own funds, or if there are program relatable points, will that be acceptable? We did not discuss any points. We want them to put down their own funds, at least 1% of the purchase price of their own funds. What is the AMI that you are using for the income? Andy, the AMIs that you see on the screen, we go up to 150% of the AMI for Zone B and 120% for Zone A. The HUD income limits from Department of HUD is also on the Department of Housing website in order to know the maximum for the household size. Will an inherited property count towards buyer's property? Property is in trust, but the buyer is listed as a beneficiary. Great question, Angela. Yes, the buyer is considered owning a property. Even if they are the beneficiary, they own a property. When you say minimum 1% down payment, are you referring to a borrower minimum contribution? Yes, Christian. If borrower is eligible for the $70,000, they will more than likely be putting down more than 1% since no cash back. They're going to put down 1% of the purchase price. Despite whatever the grant amount is 1% of the purchase price. Is a pre-qualification letter acceptable versus a mortgage pre-approval letter? Again, Kevin, I answered this question earlier. Pre-approval letter is required. However, if your buyer has the executed contract with the pre-qualification letter, that will be acceptable. But we're going to go in steps, and it's a mortgage pre-approval letter and then an executed purchase contract. We all calculate income differently, so it would be great if TRP or NHS can provide a tool calculator that we can use to make sure borrowers are within the 38%. Is this possible? Yes, Yasmin. We ask you to contact TRP or NLS because they're going to do their own session for lenders. So again, please work with NLS or TRP. We ask that you contact them regarding that information. If the borrower has a spouse not on the application, do we need to document the spouse's income? Yes. Everyone in the household 18 years and older, income is considered. Everyone in the household 18 years and older, income is considered. Could debt be paid down at closing to bring DCI to 38%? No, Gabriella. So the FAQ says a down payment required. Yes, buyers must contribute at least 1% of the purchase price from their own personal funds. So if the down payment is 3%, then at least 1% goes towards the 3%, correct? Yes. So again, that's a question of if they put down more than 1%, are they allowed to? Yes. If a borrower just started receiving bonuses, commissions this year, and a year to date, is that part of income now? Yes. As a lender, we need 2 years. We're going to count the most recent income. The most recent income, that includes bonuses, commissions, everything from year to date, projected out for 12 months, is going to be the most current income. We are not going to go back 2 years and average an income or estimated income. It is the current, most recent income. Can a borrower quit claim a home to qualify? No. Unfortunately, no. You cannot quit claim. We want you to purchase this home and obtain a mortgage loan. How do you calculate overtime and bonus? Do you average over 2 years and years to date or only years to date? We're going to ask you again to contact NLS and TRP as they are going to determine income. The City of Chicago will not collect applications nor determine income for the HomeGrown program. So that cannot be paid from borrowers' own funds to bring DTI down, not trying to use the DPA for that. The borrower can pay down their debt, absolutely, but the HomeGrown program cannot be used to pay down the debt, if that makes sense. So, Alex, Chicago's AMI for a 4-person household is about $182,250. So, is that the number we treat as 100%? So, Alex, I'm going to ask you, we can hold a conversation offline because this DTI, I mean, not DTI, but the AMI is going to be based on the HUD income chart. So I want to fully be sure I understand your question. If you want to come off your mic, Alex, and then talk with me so the whole group can hear, that'd be great.
Can you hear me?
Yes, I can.
Perfect. Okay, so I'm just a little confused as to how to set up the like how to know if the person is within the income limits, because everywhere I search up or look up, AMI income is different, and it's also different based on the household size.
That is correct.
Just wanted to understand what is like where can we go to find like to calculate the income to make sure that our client is within the income limits?
Well, again, the chart has been placed in the chat, and yes, you do have the numbers correct, but merely the mortgage real lending industry, you all kind of do calculate income the same way. So again, if you want to know in particular how NLS or TRP is going to calculate income, we ask you to reach out to them. But I can tell you for a 4-person household at that dollar amount, that means that they cannot exceed that $182,250. That is the maximum for a household of 4 at that 150% AMI. If they exceed that, they are ineligible for the program. And the same for the 80% AMI. If you pull it up, you see that the 80% AMI for that, it's not the 145,800 you have on the screen. 80% at 150% of the AMI is 127,650. So again, the numbers that you see on that HUD income limit chart, the borrower gross household income cannot exceed those amounts that you see on the chart. If they exceed those amounts, then they will not qualify for the program. But if they are within the percentage limits, then they can receive the grant according to the chart that you see on your screen.
Okay. And household, like who is counted in a household size is only people 18 years and older, correct?
No, incorrect. So gross household income is considered for 18 years and older. As far as household size, that is everyone in the household. That's children. You're going to count everyone except the dogs and the cats, everyone.
Okay,
So if
understood.
it's a
Thank you so
two-parent,
much.
if it's a 2-parent household and 3 children, that's a household of 5.
Perfect.
And so we're going to count the income gross for those 2 parents.
Awesome. Thank you so much.
You're welcome.
Bye-bye.
Kayla Bates, you have your hand raised. Kayla, are you there? Amra, I'll take your question.
Thank you, ma'am. Sorry.
Hi, can you hear me?
Yes, Kayla. 1 second, Amra.
Sorry. So I guess I'm going back to the borrower 1% contribution. FHA minimum is 3.5% down. So borrower contributes percent. Let's say that they qualify for the 70,000. Obviously, that's going to be way over the 2.5% needed for FHA, but the grant will.
You cut off, Kayla. I didn't get the end of your question. Kayla, you broke up.
We didn't get
the.
I'm sorry. Can you hear me?
Yeah, you broke up though. We didn't hear the rest of your question.
Okay, so the grant would cover the remaining 2.5% needed for the FHA. But let's say that's only 50,000 with down payment and closing costs. So then could we up that down payment to cover the remaining 20% that they qualify for?
Can you restart it again? You have broke up during the middle part, so I want to be certain I answer your question correctly. Can you start over, please?
Okay, so FHA minimum is 3.5%. The borrower contributes 1.5% of or 1% of their own funds. The grant would cover the other 2.5%. But let's say that only totals 50,000 with closing costs. Could we up that down payment to cover the remaining 20,000 that they qualify for if they're qualifying for the 70,000?
You want to up the down payment of their own funds?
No,
Is that what you're saying?
use
Because
the remaining grant.
No, they can only use the dollar amount that is associated for the zone and the income they're purchasing in.
Right. So if we can't get there by the minimum down payment and the closing costs, then what happens to the rest of that down payment assistance funds? How do we utilize that? How do we apply that?
No, you're going to apply the full grant amount that you see listed on your screen. You're going to apply this full grant amount that you see listed on your screen.
So if my 3.5% doesn't equal the 70%, then I would up that down payment to cover the 70% with down payment and closing costs.
Yeah, I'm not certain of the percentages. I don't want to speak on the 70%. I'm not certain what 70% is.
I mean, 70,000, sorry.
You're gonna, yes, whatever they qualify for, you're gonna use this chart and the property, and that's what they're gonna plug in at TRP and NLS to make this loan go through.
Okay, so we as a lender would make sure that that 70,000 is hit by upping the down payment percentage.
Yes,
Okay, perfect. Thank you.
you're welcome. Monica. Monica, you
What-
have your hand raised. Christine.
Yes, hi there, it's Christine.
Hi, you
So-
have your hand raised.
I did. So just to, I clearly understand this. You said that this program won't work if there's a fourth lien against the property. Is that correct?
That is correct.
So
We
they'll
will
have
not be in
obviously,
fourth- we will not be in fourth lien position. We cannot take that low position.
okay, so they'll have the first lien to purchase the property up to 2 units. But then I was reading that they can't have a HELOC.
That's after they close. After they
Okay.
close, we can't give you money for a grant and then you go out and do a cash out refi. You're taking the money back that we just gave you.
Okay. I wasn't sure how the second and third lien works.
That's only when they close. So like, for example, the mortgage provider is going to be the first lien position. Let's just say they get another grant. They get another grant out here that is not bond funded. That can possibly go in second lien position, and then we'll go in third. We are not going in fourth lien position.
I understand. Okay, got it. Okay, thank you for the explanation.
You're welcome. No
I
problem.
don't believe I heard my answer. I asked about the 21 million and how it only translates to 340 loans at $70,000. Is there plans of adding money to the fund, or is this once and done?
We won't know, Beta. We have to see how this one goes along first. We can never speak to future funding, unfortunately, with City of Chicago programs. I'm sorry, I cannot provide that information.
Is there a way to know how much money has been already allocated from day to day on your website?
Nothing. We have, this program just launched today. No one has closed. So it's 21 million available as of today.
Thank you.
You're welcome. Angela, you have your hand raised. And then I want us to all be, please take down my information because we are getting close to time and I do have a 12 o'clock hard stop. So please feel free to send all of your questions to my email that you see listed on your screen. But again, I'm here for the hands that are raised. Sandra?
I'm sorry.
Angela? I'm sorry.
Yeah,
Go ahead, Angela.
It's okay. So just so I can clarify, if a person falls under that $70,000 grant, they're going to receive that full 70,000 versus a variation of that. Is that correct?
That's correct. If they meet
Okay.
the household income requirement of 80% and below, and if they're
Okay.
purchasing within zone A,
Okay.
have to purchase
Regardless
within
if we need it or not, they're going to get that grant for 70.
That is correct. That
Okay,
is
I
correct.
think that answers a lot of the questions about the 1% and the 3%. They're going to get the full amount and then we allocate it accordingly with closing costs first and down payment. Okay,
is correct.
thank you.
You're welcome. Sandra, question.
Yes, hi. Actually, follow up on those funds. Obviously, since the program just started, we know that no closings happened yet. But as we go further, is there any way on the website to see how much would there be still funds left? So that way we know if there's still a chance for our clients, because I'm sure the funds will kind of run out pretty fast. But as we go, is there any way to see how much money is still on available?
We may, when we get towards the end, we may put that up on our websites. We just ask you to always look back at the website and always contact our providers as well. But we do not see this running out within 2-3 weeks. Yeah, I guess the perception is that it will. We do not see that. Again, people have qualifications that they have to meet before they are closing on a homegrown purchase assistance grant. So we will provide that information when we get nearer to that point. But if you don't hear anything, you should be okay. And again, any buyers that are going to apply and we're, let's say, at $100,000, they will get notification that we are low at funds.
Okay, thank you.
You're
Hi,
welcome.
Hi, Destiny. It's Jenny. I'm hopping in. I got additional clarification. There was a number of inquiries regarding documentation, residency, and citizenship status. So to clarify, in addition to a driver's license or a state ID, as a sanctuary city, the city of Chicago can also accept the Chicago city key. We will also accept a passport or a consular ID. If you have any additional questions, feel free to reach out to, TRP or Neighborhood Lending Services. Thank you.
Wonderful. Thank you, Jenny. I appreciate that. Thank you so much. Joanna, your hand is raised.
Yes, I have a question. I was just wondering if you could clarify a little bit more on that 38 debt to income ratio. I'm a little bit confused on when, like, how do we, you're saying they have to qualify with 1% or whatever down payment they're putting, they have to be at 38 before you put the grant, or it's after you put the grant? I guess I'm confused on that.
We're going to look at what they can afford before the grant, but if that grant is going to make them at 38%, we're going to accept that as well. But you cannot, they cannot,
Okay,
when they're closing at that closing table, that debt to income ratio cannot exceed 38%.
Okay, I thought so, but at one point you said something that got me confused. I just want to clarify that with the grant, as long as they are at 38, we are good.
That is correct.
Thank you.
That is correct. You're welcome. We have Katarzyna. If I said your name incorrectly, my apologies. You have a question?
Yes, no worries at all. So do you happen to know how we check that grant under 1003 on the application? Because I'm assuming if we're going to put this, let's say $70,000 grant.
Can we unmute, please?
No, you're fine. If we're going to put that $70,000 grant, I'm assuming that our CLTV is going to jump like crazy up. And I'm just wondering if AUS will be even giving us any approval with that increased CLTV.
Can you repeat the end part? If who? I didn't make out who you said.
So I'm just wondering how we put this on the application, that grant. We put it as a grant.
Yes.
Or, okay, because I'm assuming our CLTV is going to just jump up and it may cause some like automated underwriting system maybe not go through.
Okay. Yeah, you're going to put it merely as a grant. This is a grant. Like any other grant that you work with, this is a grant.
Okay. And another question is, as far as that HUD counselor, you said this one, the first one, before they get a contract, it can be done on Zoom, right? It doesn't have to be in person.
That's up to the HUD delegate agency. It's not us. The HUD delegate agency provides their schedule and they provide how they conduct the training sessions. So your buyer must contact the HUD delegate agency to register for a HUD home buyer education course that's 6 to 8 hours.
Do we have a contact information so we can give the buyer, hey, this is where you need to reach out to schedule that?
It's in the chat. And it's also, again, on chicago.gov/homegrown, but it is placed in the chat.
Okay, thank you.
Okay. You're welcome. Edwin, do you have a question?
Yes, good morning. Thank you so much for hosting this call. It's been great. As you were answering questions, the scenario popped into my head regarding the amount of down payment assistance if someone falls in a bracket zone A where they're receiving 70,000 they're eligible to receive 70,000 in assistance. However, the 70,000 puts them above the 25% of the purchase price. Will you guys make adjustments to give them what just is 25% instead of, declining them because?
Yes. Yes.
Okay.
Edwin.
Thank you.
Yep. Yes. Great question.
Thank you.
You're welcome. Amra, question. And again, after this, we're going to wrap up. I'm going to ask everyone to email me your questions because we cannot hold up any further time. We're going to have a hard stop at 12. Amra, your question, please.
Thank you, ma'am. Do we have like an application when it comes
I can't
to
hear you, Amra.
Sorry, can you hear me now?
Yes.
Do we have an application from your end where we put the household number and their ages and stuff like that? Is it like similar to the IDA or there isn't?
No, there isn't. You're going to visit one of the websites that you see on the page here, and that is where your buyer can obtain the application. Now, again, remember, they must have an executed purchase contract. So if they have a purchase contract, they can go here to chicago.gov/homegrown and type in the property address, and it will inform them if they are purchasing in Zone A or Zone B. From there, they must contact TRP or Neighborhood Lending Services to begin the application.
Thank you, ma'am, for the
You're welcome.
clarification.
You're more than welcome. Carla, last question, 203K. Yes, that is acceptable, but again, the rehab cannot exceed $50,000. Everyone, I thank you for your time today. Please contact me with any and all further questions as we must conclude this presentation. It has been great speaking with all of you, and this is a great program, and we want you to promote it as such. It's absolutely amazing. This is, again, down payment assistance. It's a grant. It is not to give away homes or for free per se, or just give away a home without a mortgage. This is grant assistance for affordable housing within the city of Chicago. And we thank you all for your time today, and you have a great day.